Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for another video coming out of the lemon garden. Alright, so this video is going to be a little different than my normal uploads. I just want to kind of talk on this topic. So essentially what led to this video, I'm going to try and do this quick. I don't want to ramble on. I want to kind of get into the meat of this. In the morning, I have a trade room. If you're interested, we trade Mondays through Fridays. We trade Forex and crypto, and we go on from pretty much 8 a.m. U.S. Eastern Time all the way until sometimes 1 p.m. U.S. Eastern Time. Sometimes we'll go a little bit later. We'll close out a little early. Depends on the market. But in the morning, this topic came up for a couple reasons. One of the members watched a video kind of talking about ICT, kind of, saying how ICT doesn't really work and all this stuff. And I just kind of want to throw my hat into the ring and explain, at least from my perspective, from my experience, which I've had over a decade in trading now, and I've had some success, what actually works in trading, what is thought to work. Okay, like I want to kind of give you my opinion. Again, it's just my opinion, but I do believe this, and I want to make it very clear. I personally do trade some ICT concepts. Okay, so it's not like I'm wholly against ICT, but I'm going to explain why, in a lot of ways, that it doesn't actually work the way you think it works. It works as a framework, but it will not work the way you think it works. And I will also push back on some things ICT himself has said. And again, it's just my opinion. And if you disagree with it, please let me know. I'd love to get your thoughts on it down below in the comments. And if you agree with it, please let me know. Let me know what you agree with. And if you have questions, obviously, leave those down below. And make sure to join the Discord because we'd love to have you if you haven't joined already. Okay, so let's start off with what is thought to be real. What is believed to work? Because this is what the majority of traders in any market are using, right? This is what they believe, all right? And number one is trading indicators, price action. Yes, that includes ICT and SMT, smart money concepts, all these things. All right, so what do I mean is it's thought to be real? The reason why it's thought to be real is because in the markets, and this is irrefutable, and I will give an example of why it's irrefutable. Markets, price action has a randomness to it. There is chaos within the markets. Now, let me get a little bit deeper. All right, don't just switch off. I understand. There are reasons for why things happen. I completely agree. There are definitely reasons for why price will do X and Y. However, the rate at which price does X and Y is the random part of the market. If 100 times, 100 times the market is going to get a piece of news, okay, or some sort of event, over 100 times comes out same day, every day for 100 times. Of those 100 times, if there's one time alone, that when price says the same thing, it does not react the same way it did 99 times before, guess what? That is still randomness. Now, the probabilities are extremely in the favor of the 99 previous times it does X and Y. But that one time, as long as you do not know when that one time of divergence happens, it is random. And that is the markets. There are plenty of examples, all the way from Forex, where central banks do unexpected things, all the way to the U.S. markets, where our central bank or some sort of regulatory body does an unexpected thing, all the way down to crypto, where some exchange shits its bed or something X that you could not expect happens. Those things are random. And it even goes even as low as an individual with enough money in a market that's illiquid enough can break your idea. Okay? So if you're trading, for example, let's say you're using ICT concepts and price just went through sell side liquidity and we're hitting this bullish daily fair value gap. Oh my God, there's a breaker there too. I'm going to go long. Well, that may work 80, 90 times out of 100, but this one time, or these previous 9 times, I, who have $50 million and am trading a $2 million market decide, go fuck yourself, I'm getting out, and I sell it all. Guess what that does to your idea? It kills it. Okay? It kills your idea. It gets rid of the whole structure you were trading because you could not predict I would do that. And yes, there are plenty of individuals who can and have done that, including myself. Okay? There are plenty of institutions and entities that do that all the time. So I am tired of hearing, okay, you're hearing the frustration in my voice. I'm tired of hearing that people are getting upset because when they trade, their trade doesn't work out. Yes, most of the time, a lot of times, your trade won't work out because there is randomness to the market. Now, that's not a bad thing. There's a way to succeed in that, and we'll get into that once I get into what actually works in trading. Okay? But ICT, SMT, indicators, price action, whatever you're doing, it doesn't matter because there are exterior forces that do participate and they do break your idea. And anyone who says otherwise, what is not big? Okay? They've never been big enough to be that. There's no way you can tell me that that's impossible when it happens all the time. Okay? It happens all the time. Okay, so I just want to make that very clear. It does not mean ICT, SM, smart money indicators, none of these don't work. Doesn't mean that. It just means that they are not immune to the chaos that is the market. Period. Number 2, setups. Grade of opportunities. I've seen this before as well. Oh my God, that's a 5-star setup. That's an A+ setup. Oh my God, that's a supreme A+ gold star, platinum star, palladium star setup. Yes, you will have setups that increase the probabilities in your favor, but guess what? Those setups are bending the knee to chaos, randomness. So no matter how good your setup looks, there will be a random aspect to the market. So if you have a 5-star, grade A, platinum, plus setup, your best setup ever, it may have a 90% win rate, but if you cannot have the info for me to tell me, okay, of the 90 times this works out, these are the times it's going to fail. These 10 times I can give you the exact day. It's random. You don't know if this trade you're taking is going to fail. Okay? So it's very important. Just pummel that into your brain. The markets are random, and no matter how good your setup looks, it is still capable of being killed by a random act. Okay? Hopefully that makes sense. No matter how good the setup looks, your idea, your setup can still be killed from a random act. Okay. Number 3, ideas are opinions. Yes, your idea, no matter the terminology you use, is your opinion. It does not have any concrete in reality. It does not have any concrete reality. It is your opinion that is created from your pattern recognition. And we will get into that. Okay, we will get into that. You use frameworks, you use structures to understand what data is in front of you. And from that understanding, you create ideas. But it is very important that you accept wholeheartedly that your ideas are just opinions. Nothing more, nothing less. Your opinion's not special. The market does not give a shit about you or your opinion. You are worthless to the market. Okay, I know that sounds very negative, but it's very important to understand this. Never come at the markets with pride, because when random acts happen, they will not just kill your idea, your opinion, your trade, they will shatter your confidence. And it is inevitable. Inevitable. You will be the victim of a random act. Okay? It's to protect yourself. Take it from someone who's been trading for over 10 years. You must never, ever ever come to the markets with pride, because then it becomes personal when you're wrong. And you will be wrong a lot. All right. That is what's thought to be real. That is what is believed to work. And this is, in my opinion, one of the main reasons why 85-90% of traders never graduate from being boom bust traders to being consistently profitable. This is the main reason why. Because they can't get their heads out of their asses and understand how irrelevant they are to the market, and that what you're trading is ideas, opinions, and it's not what actually makes you fucking money. What is actually real in trading? What actually works? Number one, this is it. The 1% rule. Jesse Livermore, study him. He gave you the answer. Jesse Livermore, back in 1910, 1914, gave you the answer. Risk 1% to 2% of your account per trade. Period. Full stop. End of fucking story. All right? There's the answer to trading. There you go. If you do this, you will not blow up your account. Okay? You will not blow up your account. Will you be profitable? Probably. Will you be optimally profitable? Probably not. But you will not blow up your account. End of story. I do not understand why people cannot get this through their head. 1% rule. The 1% rule goes into survivability. That's just what I talked about. Survivability. You want to survive the markets. That is your job. Your job is to survive, and the way you survive is by being the best risk manager you can be. So the best risk manager you can be is risking 1 to 2% of your account per trade. You will survive, and then when you make money, compound on the account. Okay? See the word under survivability? Compound. So what that means is, if you started with, let's just say, I don't know, let's go $1,000. All right, you made, let's say you doubled your account. Okay, so now instead of $1,000, you got yourself $2,000. Congratulations. Okay, that's incredible. Now, before you were risking per trade $10, because that's 1% of your account. Now you have $2,000. So now you're gonna risk $20 of your account. So what ends up happening? You're compounding your trade, because now your trades are bigger, because you are naturally, organically increasing size, but keeping the same 1% risk per trade, which creates what? Sustainability. And there is the secret to being a successful long-term trader. Whoa. It's not this indicator, it's not that price action theory, it's not X and Y, it's not these holy grails, it's just risk management. And because this risk management is working and always works, that means you can then use whatever indicator you want, whatever price action theory you want, and you will find success as long as you use that risk profile. I hope that makes sense. And guys, I'm not trying to come in super aggressive, but I do get fairly fired up about this, because this is all that stands in your way from being able to trade profitably long term and have something, a skill set that you can use. I'm not going to say you're going to get rich from it, but at least use to have extra income. This is it. That's it. It's not that it's easy, but it is extremely simple. All right, do not get bogged down by the terminology. The one thing you need to have under control is your risk, and it's just the 1% rule. If you don't believe me, go read Jesse Livermore. You'll do yourself a favor. It's great. He figured it out. It's a great read. Read his rules, and you'll understand why he had success. You'll understand why many traders who are successful to this day use many of his rules. Okay? Number 2, consistency. Consistency is another issue that many traders have. But the main reason is because, let's go back to number one on what is believed to work. Number one, what is believed to work? Indicators, price action, ICT, SMT, etc. Whatever. Those things are believed to work when they don't actually work the way people think it works. They only work when you have good risk management. They don't work when you throw in your entire account per trade. Because guess what? They don't actually work the way you think they work, the way it was sold to you that it works. Trade the playbook. Being consistent means that you trade your idea, your opinion, with the framework of whatever it is, indicator, ICT, SMT, whatever price action theory, but while also having the 1% risk threshold. End of story. That's it. That's your playbook. You want to trade ichimoku? Awesome. Use 1% of your account. You want to trade EMAs? Awesome. Use 1% of your account. You want to trade ICT's order blocks or his FEGs or his sell side, buy side liquidity ideas? Awesome. Use 1% of your account. It'll work. It'll work. Okay? It'll work. That's it. Backtest / logging trades. Why do you backtest / logging trades? You backtest to know the rate at which things happen. Okay, backtesting is very good, not just to give you, oh, I'm going to do so good because the backtest did good. Well, it's very important to understand that past does not prove future. Sure, but what it does give you is a framework into what you can have expectations in regards to winning and losing. And what I mean by that is that the rate of winning and losing. Okay, not your win rate, the rates of winning and losing. How often did this strategy lose 10 times in a row, 5 times in a row, 3 times in a row? How often did it win X amount of times in a row? And if you are within the threshold that you backtested in real time, you will start to understand that, okay, nothing crazy is happening. I don't need to get away from the playbook that I am trying to follow. So you backtest to then create conviction and confidence to trade the playbook. Whatever your playbook is, you need to backtest it so you have confidence to stay with it. If you don't stay with the playbook, then you will not have any sort of history to fall back onto to give you structure. See that? If you don't have the history, if you don't have the structure, you can't find any truth. Not opinion, truth. Number 3, intuition. So intuition comes with what? Experience. And what do you have to experience to get intuition? You have to experience the market. What is the market? Chaos. This is going to be crazy. It's also order. Why is chaos and order the market? Because the markets move on probability. Probability. I'm going to say it one more time. The markets move on probability. And because probability rules the day, there will be X amount of times X happens and X amount of times X doesn't happen. And when X happens, that's order if it is more probable. If X doesn't happen and it's improbable that it wouldn't happen, that means it's chaos. And you have both. So, for example, you had a bullish crossover on EMA. This is the most basic. Oh, you should go long, right? So let's go long. Bullish crossover, EMA. I'm going to the moon, baby. Go long. And then price dumps. And you get a bearish crossover. Your bullish crossover failed. Guess what that is? That's called chaos. That's called being wrong. Okay? And the more you study this and understand it, you will start to get discernment. And what discernment gives you is the intuition, the understanding that all your trades are probability based. Doesn't matter how good it looks. Doesn't matter what is said. It doesn't matter. It's all probability based. So that means you always have the opportunity to fail. Always. There's always the potential of failure. So if that is the case, if no matter how good the trade looks, okay, if no matter how great the trade is performing, that at any point in time, the next second, something can shake the market and go completely against you, What do you have to defend yourself? How can you survive and sustain your account, your life in the market? Well, go to rule number 1. What actually works, what is actually real in trading? What's number 1? The 1% rule protects you from the randomness of the market, from the chaos of the market. And if you survive long enough, you will then be able to discern the order. And if you discern the order, you will then know the probabilities of success and failure. And then you will succeed. All right? All right. That's it, guys. That is the secret to trading. That is how you get it done. All right? It's really, really simple. It's very hard. I want to make that very clear. This is not an easy thing to do because it goes against a lot of things within our nature as humans. It breaks down a lot of what we believe. All right, we have pattern recognition built into us. It's one of our superpowers and it is very useful in trading. However, you must always humble yourself and understand that your pattern recognition is not concrete truth. It is just an idea. That is just your opinion, and it will be proven right or wrong every time. And there will be plenty of times where it's proven wrong, and you must be okay with that. And the only way you're okay with that is if you don't blow up your account per every freaking trade. So follow the 1% rule, and you'll only be okay with that if you follow the playbook that you've back tested and understand up and down, left and right, through and through. So that's being consistent. And you will only be okay with that if you accept, if you have the discernment, you accumulate the intuition to know that you are in chaos when you're wrong and you are in order when you are right. Okay? That's it. That is it. So that is it for the video. If you have any questions, and please, 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 if you have any questions, I will gladly answer them. Hopefully you didn't take what I said in the way I said it too personally. I wasn't coming at you, but I wanted to get into you. This is really important. Okay, it's really important, especially if you want to succeed. If you want to succeed, it's really important you understand this. So I just wanted to really try and kind of stab you with it, okay? But I'm sorry if it kind of kind of shook you a little bit or hurt your feelings. I wasn't talking at you. I'm trying to shake you a little bit. But again, if you have any questions, let me know down below. If you haven't joined the Discord, you can find the link to that in the description below. And also get in contact with me there. I'm usually pretty active there. And then also, if you are interested in any of the services provided, check out the links below. You get more details on that. All right, guys, that is it. Thanks for watching. And remember, be patient, be vigilant, and be nimble. I love you guys. Take care.